Top 6 stocks I'm going to buy in the month of April, 5 I already own in my portfolio, and 1 I'm considering buying this month. I already completed my research and fundamental analysis, and 2 of these stocks has huge potential, 3 to 4x in the next 5 years. The first company in the list is Meta Platforms. The most of its money Meta is making in family of apps from Instagram, WhatsApp, Facebook, and also Reality Lab is the second segment, but mostly unprofitable segment for Meta. Price to earnings of 24 and forward price to earnings of 16. Recently, Google and Meta were found liable for designing platforms that are dangerous for kids and teens. Both stocks was down huge on the day, but the fine itself is very small. The problem is that there are more lawsuits could be coming for the company. Meta just recently laid off 700 people and they are planning to lay off another 15,000 people. This could be huge efficiency optimization for the company. Meta is a one-of-a-kind company with huge distribution, 3.58 billion family daily active people for the company. Revenue per person is always going up, and average price per impression is also going up. Even though in developed countries it's slower, but in the rest of the world the growth is significantly higher. Meta is down 26% from all-time high and currently trading at price to operating cash flow of 12.74, which is significantly lower than 10 years average. On InvestKit, you can run projections including base, bull, and bear case. For Meta, I have 65% upside in a bear case, 137 in a base case, and almost 3x in a bull case scenario. You can run projections on any company, so visit investkit.io. The link will be in the description below. The second company is Amazon. Amazon targets 200 billion in capital expenditures for AWS and signals rapid AI-driven growth through 2026. Amazon owns almost 20% of Anthropic, and recently in X, there are billions of tweets about how Anthropic is outperforming in enterprise segment. This will be a huge catalyst for Amazon if Anthropic is going public this year. Amazon is operating in multiple segments, but most profitable is AWS, advertising services, subscription services, and third-party sellers. Amazon is trading at price to earnings of almost 30, and forward price to earnings is 22x, which means that there is significant earnings per share growth is expected next year. Price to operating cash flow for Amazon is 16.51 times with median of 26 times in the last 10 years. So Amazon has a significant discount at these prices. On Amazon, in the next 5 years, I expect 73% upside in a bear case, 127% for the base case, and 186% for the bull case. The next company on the list is MercadoLibre. MercadoLibre's management sees significant opportunity in South America and they continue to invest. With the recent news of 11 billion more in Brazil in 2026, 50% year-over-year, mainly in logistics, e-commerce, and fintech for Mercado Pago, while they are expanding fulfillment centers and hiring 10,000 more employees. There is another feature in InvestKit you can use to visualize the financials for the company. You can choose the company, which we choose MercadoLibre, and total revenue and revenue growth. And this chart is absolutely beautiful with the revenue growing smoothly and the revenue growth is still close to 40%. Absolutely outstanding. All the companies which are investing in capex, price to operating cash flow is the preferred metric to value those companies. For MercadoLibre, price to operating cash flow is just 7.65x with the 10 years medium of 40. So MercadoLibre is on significant discount right now. For MercadoLibre, I expect 36% on a bear case, 117% on a base case, and 160% on a bull case for the next 5 years return on investment. The next company is Duolingo, 82% drawdown from all-time highs, absolute devastation for the company's share price. Meanwhile, the price to earnings is 11 and forward price to earnings is 11, which is dirt cheap for the company with growth rates like Duolingo. They completed 2025 surpassing 50 million daily active users and generating more than 1 billion in bookings. As well, managers see 82% decline in the share price as an opportunity to buy back cheap stocks. They are authorizing 400 million repurchase program to take advantage of this opportunity. Duolingo director just recently bought 5,000 shares worth of $500,000 on the open market. There was a time when Duolingo was traded at price to sales of 30 and now the company is trading with price to sales less than 5. The company valuation compressed significantly, and if you believe that AI is not going to kill Duolingo and the company has a moat, then this is very cheap for the company like Duolingo. I made a whole deep dive video on Duolingo, so if you want to learn more details about this company, click the link right there. On Duolingo, on a bearish case, I expect 138%. In the next 5 years, on a base case 184%, and on a bull case almost 5x for the company if everything goes right for Duolingo, if Duolingo can prove that it has a moat, if Duolingo can use all its distribution. I believe that the company could give significant return to investors. The next company which is totally obliterated by the market, which is experiencing one of the largest drawdowns in history, Adobe, $244 per share, minus 65% from all-time highs. Adobe's PE is 14 and forward PE of laughable 9.2. PEG ratio is less than 1. After announcing earnings, the shares continue to go down because CEO announced that he will be stepping down from the company's leadership after almost 20 years leading Adobe. He transitioned Adobe from one-time payment to subscription model, which is absolutely game-changing for the company. Adobe is trading with almost 10% free cash flow yield, which usually is the level of AT&T and Verizon free cash flow yield. This is absolutely laughable for the company, such high quality. For Adobe, on a bear case, I expect 5% in the next 5 years, which is basically break even. For the base case, 95%, and for the bull case, 4x for the shares if you buy them today. If you want to know more details about Adobe, I did a full deep dive on Adobe and explained why investors are not buying the dip in Adobe stock. Click the link and welcome to watch. And the next company on the list is CrowdStrike, the cybersecurity giant with 5.25 billion annual recurring revenue. All cybersecurity stocks went down significantly after Anthropic said that their new model is ahead in cybersecurity's capabilities. They warned that future models may exploit vulnerabilities faster than defenders can respond, so they will share this model with cybersecurity companies first. All cybersecurity stocks went down on that day, but I believe this is actually bullish for cybersecurity company. I said here bullish for all cybersecurity stocks. CrowdStrike from the beginning is AI first company, and the more powerful LLMs become from Anthropic or from OpenAI or from Google, this is actually good for cybersecurity companies, which can apply this model trained with their proprietary data and make the protection much better than before. For CrowdStrike, they can cross-sell 6 plus, 7 plus, and 8 plus modules are used by more and more customers over time. But I would not say CrowdStrike is a cheap company whatsoever. I visualize here software as a service price to sales valuation right now, and the CrowdStrike is still trading at price to sales of 20. Meanwhile, Salesforce and Adobe are trading at price to sales of 4. The management believes they can take advantage of the current decline in the share price and announce another 500 million buyback program. For CrowdStrike, on a bear case, I expect 15% over the next 5 years, on a base case 60%, and on a bull case 125%. So here on the CrowdStrike, you can see that even bullish case is only double for the next 5 years, which is not as juicy as other companies I shared today. But CrowdStrike is a very high quality company, and I always wanted more exposure for cybersecurity. I really believe that cybersecurity will be one of the most important part of post-AI era. That's why I always wanted to own more of CrowdStrike. I already own the position in CrowdStrike, but I want to buy more. I would hope that the multiples will continue to contract so I can buy cheaper shares for the long term. We're doing the beta test for InvestKit and all functionality are available for free. The link will be in the description below. Thank you so much for watching, and I will see you in the next one.